Hello financial investors and welcome to the channel. My name is Brent and today we're going to be starting off this video by taking a look here at stock futures. We had some good economic news here on Thursday that really popped the market across the board, nearly 8%, pushing us for a very high return. This week we're up already over a percent across all the indexes. We've been hitting some new all-time highs, so it's pretty exciting. Now I did make some sells over on my M1 Finance Roth IRA. We'll talk about the sell, and then I moved some of the capital that I received from that sale over into two positions. So we'll kind of cover that, and then we'll also go into Y charts, kind of compare the valuation of the stock that I currently sold and where I moved that equity into. So that is what we're going to be covering in today's video. It should be fairly quick, and I wanted to kind of just make this video because I know a lot of investors are following me over on Instagram, and I try and post my daily activity quite a bit more over there versus I don't release videos here on YouTube day after day after day. I just don't have that time to do daily uploads, but I do try and upload a little bit of information over on Instagram. So if you guys haven't checked out my Instagram page, links are down in the description below. If you haven't subscribed to the channel, subscribe to the channel, give this video a thumbs up, and drop me a comment if you have any questions at all or would like to see a video on an upcoming topic in the future. So let's go ahead and get into it. So Thursday, across the board, all the indexes were positive by nearly 1%. The S&P is now up over 1.25%. 5-day change here. It's up 1.29, and this is including last Friday loss of 0.29%. So right across the, in 4 days we're up 1%. So Friday, I'm expecting a bit of a positive day on Friday. You can see stock earnings or stock futures are already positive. We had really good news here on Thursday. Generally, we like to kind of end the week here on a positive note, so I think that'll do really well, and that's what I'm sort of expecting. Now, I did sell out of one position, not completely. I took profits, so I had about, I'm not sure how much profit I had over on Apple, but I sold $250 worth of Apple. That was about 0.79 of a share at a sell price of $315.34. Now, this gave me quite a bit of equity to reinvest into the portfolio. So what did I do? I looked at the portfolio and I decided, hey, what is at a good valuation right now? And I did have a few positions in the portfolio, such as Waze, General, GPC, Genuine Parts, and a few other positions, but I had talked about Simon Property Group here in this past week when I was looking at the entire portfolio and looking at the valuations of where positions are currently at, and it just made a little bit of sense. So I just want to add a little bit more equity over into Simon Property Group, and then I added the remaining into Waze because Waze has been getting beat down. It's one of the most beat down positions in the portfolio right now that is newly added into the portfolio. So I'm going to continue to add into it as it's moving into the red here in the future. Now, why did I make this move? Well, I'm actually going to show you here. This is where I kind of keep track of my buys, my sells. So here on, not the 14th of January, today was the 16th of January, so let me just update that. So on the 16th of January, there's my sell. 16 January 20. I made a sell of Apple of 0.79289 shares at $315.34. My sell basis was roughly $250.01, but this shows that it's $250.03. That is because SEC fees is around 2 cents when you're selling shares. And Apple today, as of that sell price, I missed out. No, it's down about 8 cents from that sale. So I sold it at one of its higher points in the day before it kind of coming back. Apple, with that 0.79 share of that, 0.79 shares of a whole share, that was earning me annual income of $2.44. So here, my Apple position up here is still about 2.77 shares. I do own Apple and a few other portfolios. It only has $483.43 of equity remaining of my cost basis in this position, but its current valuation, its current value of this holding is $873.24. So you can see there's a nice nice difference there between my cost basis and the valuation. So all I did here was take profits based on the profits that I had made. I still have about $389 of profits remaining in this position. I don't believe I'll ever, I won't sell any more of Apple currently. It's right at that position I'd like to kind of keep it at. If it does fall below $200 or $300, I'm sorry, I will definitely probably pick up more here in the future, but I'll kind of let it be for now. Now, what did I do with that capital? As I said, I moved that capital into two positions, so I didn't add brand new equity in. I merely sold and took profits out of one that I believe was flying high in the sky, and I moved that equity elsewhere. So $100 went into SPG. That 0.67 shares is going to be making me a yield of 5.65%. Its current dividend pays out $8.40. So annually, that 0.67 share that I purchased from SPG is going to be earning me an annual income of $5.65. So right there, that is almost 3 times the amount that's out. 0.79 share of Apple would have made me. But I also bought 6.32 shares of Waco Group here. So this one pays out 96 cents per share each year, but for all those 6 shares, it's going to be earning me an annual income of $6.07. So I saw that SPG in ways were at a better valuation and buying opportunity versus where Apple is currently trading. So all I did was lock in profits. I didn't sell any of my original equity that I had invested. I just took a little bit of profits, moved it elsewhere where I believed I could earn a better difference there, a better return in the future, possibly. It's going to generate me quite a bit more dividends, but as far as maybe the returns, that may be lacking, but we'll kind of see how that kind of plays out in the year. We'll be able to kind of see where this is at in the future and where this is at in the future. So the sum between these two here is down on the bottom right. I'm not sure if you guys are able to see that, but it's $11.72 from these two new positions that I added. And I'm now missing out on $2.44 from the shares that I would have had in Apple. So I increased my dividend income by selling some of Apple and moving it over into SPG in ways by $9.28, or roughly $2.32 every quarter, just an increase there, just by moving equity around in the portfolio from where I believe one position was maybe slightly elevated into two positions that I believe were maybe undervalued, or won't have as far room to fall versus Apple. Now, Apple, let's take a look at its current valuation. I know I posted over on Instagram that Apple today now dropped below having a starting yield of 1%. Apple here up on the chart. Let's go ahead and zoom in. I know last time I did a video with this, it was not too easy to see on mobile, so I want to make sure I fix that. So Apple today, it's trading at $315.24 with a starting yield of 0.96. This is a 1-year time frame. Take a look at where this stock has came as of July 2019 till now. It's basically 50% increase there from 200 to now $315.24. Now, a lot of investors are kind of getting into this now, but look at this buying opportunity back at the end of 2018 and early 2019. Apple was trading at $150, $160. It was yielding an over 2% starting yield, or I think it was about 2.10. I can't actually see. I can't zoom into the specific level here, but you can assume here, 125, 150, 175, this little bar up here would be about 2%. So you were nearly getting a 2% starting yield on Apple, and a lot of investors were loading up. I believe I did sell a little bit of Apple in the past around 208, and then I moved it into Avi. I know Avi's also had really good performance. I'm not sure if it's had as much performance as Apple, but just for example, I still think that Apple at this point, I think it did hit its recent high. You can see here that it did hit, let's see, I think it's a ceiling of, I know we can use here, This will show us its 52-week high. Maybe not. Okay, I don't think I can see it over here either. So, okay, we won't look for the 52, but I believe the 52-week high is just slightly higher than where it's at. We'll just say it's 316. I think that we're going to hit some resistance. We really haven't seen a lot of resistance with Apple. I do think that we will be retracing. We can see here that we traded sideways just for a few days here before breaking out to some new highs with an Apple here, kind of hit a high, broke back a little bit, traded sideways for a while, and then had a huge gap up. And I think, here's our pullback. We had a little bit of recovery. I'm not sure where it's going to go from here. I just decided to take profits. I do believe I made the smart choice of kind of just locking in profits and moving it elsewhere, but we'll kind of see how this plays out in the future. I don't think that there's anything wrong with Apple. I think Apple is a great company, especially with their new 5G phones coming out here and this new rollout here in 2020. I think there's a lot of room for this company to still run up and increase in valuation. But I do believe here in just the short term, I think we are due for a bit of a pullback, maybe retesting 280 here, maybe just retesting either about $300 or $280. I think that would be safe before we do move to any higher. I'm not going to go too much into other. I guess we could put in our 250-day moving averages. You can kind of see here where we are at as far as, let's go ahead and put in the 1 year. That way you guys can see a better view here. But for quite a while, the blue line here, it was trading below the 200-day simple moving average. It was just constantly just nice. You'd have a couple areas here where it would kind of trade above both the 50-day and 200-day moving average, and you had days where it would break below that 50-day and 200-day moving average. Well, guess where we are now? We are completely above that 200-day moving average and 50-day moving average. Here's that the 50-day here. This is where I believe we will retest. So about 280 is where I do see Apple possibly pull it back here, in the short term. If there's any sort of hiccups in earnings or, anything out there globally that could take effect, this is where I believe Apple will retreat to. So that is all I want to kind of cover there for Apple. I just think in the short term, it is popped high. Now, SPG, this one's been beaten down in the short term. And this is why I believe this one kind of offered me a little bit of a, maybe not as much room to kind of fall here. You can see recently, as of the past year, so looking back here, you don't see a lot of positions below really this point. This is a mall real estate investment trust. So this could be a reason why this is falling. Mall earnings came out recently and numbers for Target came out recently, and they haven't been doing so well. So that kind of played a part here with these mall REITs. So just kind of looking at the past resistance, this is a good resistance level for this specific company. You can see right about this 148 level is where it starts to get some support. Supports what I meant. And it is trading below currently its 50-day 200 moving average. You can see here just not too long ago it was offering a nearly 4% starting yield, way below where it's currently offering a nearly 5.6% starting yield. So over the course of the past 10 years, this is the highest starting yield that you would be able to purchase this specific company at. So 5.6 back in the past, you couldn't get this over around 3.2%. It wasn't until recently here in the past 3-4 years that you're now starting to get yields above that 4% and now getting a yield of 5.6. So kind of looking at its valuation, I believe depending on how earnings plays out, I don't believe this company's gone off with earnings yet, but it's just a good time as far as to load up in my portfolio. It's not growing and paying out dividends for the longest time. It does have a 9-year growth rate for its dividends. Apple has about 7 years now, I believe, and they're going to be increasing it here in May for their 8th year in a row. So we'll kind of see how this kind of plays out. I think I wanted to note this, that way it's recorded, and in the future, just depending on how Simon Property Group recovers and how Apple does here, will kind of play a part. And if Apple does pull back, that's fine. I'll be happy. I'll buy more. If SPG continues to fall back, I'll probably add more equity into this one as well until it shows signs that it just cannot recover. And then our third one here, we've talked about this here during our buying videos. So every time I do a buy, I think Waze Wazeco Group has been in my buying group of companies to buy. And here you can kind of see that support level as well. $23 is that support level. And it's been hitting it and retesting and hitting it and retesting. You can see that every time it retests, it was going lower. Here we had a low, here we had a lower low, then a lower low. Now we're going a little bit higher. We did kind of break below that last low. We did break slightly below, but I think we're just kind of building some momentum sideways, and then we just need to kind of see, are we going to go higher, are we going to go lower? That's just where I currently took profits and moved it into two positions that had just been beat down here in the short term, and I do believe myself that I can get a better opportunity, and I'm already making more dividends by having moved cash around. And in the future, there's always more equity that's going to be able to be invested in the market. So if either of those three positions either fall, that's fine. I'll just add more equity. I have quite a while in the market, time remaining. So that is basically all I wanted to cover in today's video. Just kind of going over my thought process on why I decided today to take profits on Apple. I do think it's extended here in the short term. You can see over the last couple months just how far this company has moved in just such a short time. And I do believe if anything happens here in the short term, we'll see a retreat back to about $280. And I think that will be a good level to kind of retest and see whether Apple can hold it or fall back lower into the 240s and 225s. You know, fall back between that 200-day and 50-day moving average. So that is going to be it for today's video. What do you guys think? Do you guys agree with my position on Apple? Do you think that it is highly extended, or do you think it's fairly priced looking at their 5G coming up in the future? I mean, Apple has a lot of products in line in the future, but looking at current valuations and just the unknown of what is going to happen towards later this year, do you think it's at a good price? And also, are you currently invested in any other stocks out there? What do you think about Simon Property Group and Waco? So that is going to be it for today's video. Thank you all for tuning in. If you guys did enjoy the video, hit the thumbs up button below. Subscribe to the channel if you have not yet subscribed. And that is it. Thank you all for tuning in. I will see you next time. Have a great day. Bye.